Morning, Steve in Chicago with the morning grain comments. Well, yesterday was a very historic day in the grain markets when the USDA came out with their new numbers. As far as looking at the absolute numbers, it didn't really come out with anything that was a big difference between the average trade guess, except for dropping last year's corn crop. People started looking at that number, D1 stocks number, and the fact that they had to lower demand to get to a 1550 carryout, and realize that the USDA is wrong and that demand is not going to go down. And so people plugged back in the demand numbers and came out with a carryout of 1 billion bushels, which means the corn prices need to go higher. We were up the daily limit. Synthetic markets were trading higher on the close, and we're up another 18 cents now. And I think corn prices need to go higher. And then really the beat doesn't stop there. Have about 1 million, maybe 1.5 million more acres next year, 180 yield. Demand where it is, and we still have a carryout of 1,200 for 21-22. So prices are going to be sensitive, especially to U.S. summer weather patterns with this tight of a balance sheet. And in the beans, again, 140 carryout is minimum pipeline. Stocks as far as D1 was in line with expectations. They did raise exports 30 and crush 5, but some people think that they're still maybe 100 million bushels low on demand, and that would put the carryout only at 40. And so, then we start looking at South American weather, China import demand from the U.S., and soybean prices also need to go higher. A little bit of profit taking overnight in the long meal short oil spread, but Dalian meal futures continue to make new contract highs every day, and the lack of exports of meal out of Argentina and increased protein demand, especially in China, continues to suggest meal prices will trade higher. The wheat numbers were pretty much in line with expectations, although if we plug in a crop next year and demand about the same, the carryout for wheat drops to 700 million bushels in 21-22, and we think that given the dry conditions in the southern plains, Kansas City wheat futures should continue to gain on Chicago. So for the most part, wheat futures will follow corn, but when we look at Russia, there are no export prices after mid-February when their export tax kicks in. And there's even talk that they may have a meeting on Thursday to double that export tax to try to preserve their domestic bread supplies. And so with Russia out of the market, with Europe having to drop their wheat export pace, it might bring U.S. into the mix as far as just a little bit more export demand, which will help drop the carryout next year to 1 billion bushels. A lot of drama in Washington today. Market will be watching that, especially the equity market. And down the road, a vaccine could increase demand for raw materials, which could be inflationary, which could actually have interest rates go higher, and commodity prices also go higher with new money coming in with the funds already record long the grains. As always, these are my thoughts, not those of ADM Investor Services. Have a safe and profitable trading day, and remember, always treat people like you yourself would like to be treated.